This is the Smart Beach Investor Podcast, where we explore how investors leverage real estate at the beach to live big lives and build their personal wealth. If you are an investor at the beach or you want to be, you found the right place. Enjoy today's show and be sure to subscribe to the podcast so you never miss an episode of the Smart Beach Investor.
John Moran here. I am the team leader of Keller Williams Realty's At the Beach team and the CEO and founder of Smart Beach Investor. As always, we have Katie Luce here.
Hi, John.
Hello,
Thank
Katie.
you for having me.
We also have the wonderful, talented Mark Violette of Mark Violette, PA.
Hello.
Mark, how are you, bud?
I'm doing well, thank you.
So Mark is a closing attorney for real estate deals. Is that how I would describe you, Mark?
Correct. So licensed in the state of Florida, primarily concentrate on residential commercial closings, also handle sale of businesses, formation of LLCs, corporations, and 1031s.
1031. So which is what we're going to talk about here today. 1031 exchange is a massive,
We do a
huge,
lot of that.
really big part of our business here. All right. Let me ask you, Mark, off the cuff, unknown, whatever, what percent of deals that you seeing are 1031s?
So whenever there's equity in property, the percentage goes up. When the market goes down, then we lose them because really the question would be, why would anybody want to do a 1031 or what is a 1031?
Let's start there.
Yeah.
Let's go back to the beginning. What is 1031 exchange?
So 1031 comes from the IRS code 1031, sort of makes sense.
Yeah.
Of course, the code never usually makes too much sense, but this one it does. And the purpose for it is if you own investment property, you can sell that investment property, reinvest the funds from that, and purchase another investment property without having to pay capital gains at that moment.
You still got to pay capital gains.
Right. So it's called a 1031 tax-deferred exchange
go.
because in theory, all you're doing is deferring at what point you will ultimately pay some sort of capital gains.
Talk to your accountant.
So
Talk to your
you're pushing
accountant.
it down the road a little bit.
But you, Mark Violette, are not an accountant, and we're not claiming to be or anything to that sort.
Yeah, usually, so whenever somebody calls me and says, can you handle my 1031? First thing I'm going to say is, okay, do you have an accountant or do you file your own taxes? Because as a 1031 intermediary, I can approve a 1031 and do a 1031, but ultimately the information is going to have to go to their accountant who will fill out their taxes and have to file the taxes. So not that I've been doing 1031 since 2001. I've never had an accountant call me and say, oh, we can't file these taxes because of something you did, but I always like to have the client double check with their accountant.
Right. We're not accountants. He's not an accountant.
Kind of what we always talk about. Circle yourself with people, good people, accounting, lawyers.
Get your
insurance,
team.
Get your team.
Get your team. Your lawyer, your accountant, your 1031 person, your whatever. Get your team.
Correct.
Lean on their expertise. And Mark has expertise in closings. So how many closings you do a year, dude?
So I would guess between an average of 30 per month, going back to 2001.
All right. So quite a few.
So a lot.
Enough, right?
Right.
To know what you're talking about. Awesome. All right. So let's walk it through. Tell us what walk us through what you know about 1031s.
All right, so the traditional, there's going to be 4 different types of 1031s. The standard, or I call the traditional one, which you'll see most, is you have an owner who has an investment piece of property. Let's just say it's worth $400,000. They want to sell that unit and purchase another one. The replacement purchase has to equal or exceed the sales price of the original one. It doesn't disqualify a 1031 if it doesn't exceed it, but there will be something that the IRS will call a boot. So if it goes down in value, there will be some capital gains that has to be paid.
Not all, but some.
That is
From an
correct.
accounting standpoint.
Correct.
Yep.
So traditionally, the benefit of it, again, is you can upgrade or go into a better investment piece of property, which in theory should make you more money without having to take money out to pay the IRS. So let's say you decided, I'm not going to do a 1031. You sold a unit for $400, and let's say you originally bought it for $200.
Yep.
So there's a $200,000 gain there. If you've owned the unit for less than a year, you're paying ordinary tax,
Yep.
which goes to your tax bracket, which could be 40%. So you can imagine on a $200,000 gain, if you're paying 40%, that's a lot of money coming out.
Can be.
And then when you go purchase the new property, you have to generate that money somewhere because it should be earmarked to pay the IRS. So in a 1031, you get to reinvest all of the funds and you get to defer having to pay any capital
Okay,
gains.
let's talk about this for a quick minute, though. Not just any property, right? 1031 is specific to certain types of property. I can't sell my primary residence and go buy an investment property.
So the 1031 rules are going to say it must be investments.
Like kind.
Correct. They've loosened up the like kind. So you can
Okay.
own a vacant piece of land and sell it and buy a condo. You can own a condo, sell it to buy a vacant land. You can sell residential land and buy commercial land.
Okay.
So it is, I call it like kind, just as long as it's basically real property for real property.
Okay.
Okay.
And it's because the government wants you to keep
Just
wheeling
keep
and dealing,
buying. Yeah.
keep you in the game.
That was the original intent when the law was created.
Yes. And it works for me.
Right.
It's worked well for me. Okay.
Yeah. So what we normally see is we call it the deferred tax exchange.
Yeah.
So when you sell the original property, we call that day zero.
Okay.
So from day zero, you have 45 days to identify up to 3 replacement properties, which in today's market can be kind of tough because there may not even be 3 properties out there that you would want to contemplate closing.
You don't have to buy all 3.
No, you can close on up to 3. So let's say you sold $1 million property and you want to buy 3 properties that are $333,000 each. You could do that. Traditionally, people they sell 1 property, they buy 1 property.
Yeah.
I didn't know that about the multiple property. That's kind of interesting.
Yeah.
Yeah.
So then,
Options.
so you have up to 45 days to identify up to 3 replacement properties. And then from the original sale date, you have 180 days to close
6 months.
on one of those properties that you've identified.
Yep. Yep. And what if you don't close?
So the IRS is kind of black and white. So if you fail to close in the time frame, you have basically ruined your 1031 and you will have to pay capital gains.
Oh, there's no do-overs?
Well, maybe. I didn't get a good accountant and a good lawyer, all kinds of do-overs. So the question, though, that you need to be aware of, if you're buying pre-construction real estate or you're buying something sort of there,
Yeah.
beware of your timeframes.
And you do have to, in a traditional closing, let's say you're not doing a 1031, you're going to have your agents and then you're going to have your closing company. But if you're going to do a 1031, you have to notify your agent because there's going to be an addendum to the contract because in theory, before closing, whoever's doing the 1031, their contract is being assigned to their what we call the intermediary. So me handling the 1031, I'm called the 1031 intermediary.
Okay.
And that must be done before closing because according to the IRS rules, if the seller were to ever receive funds at closing, they can't do the 1031.
Game's over, right?
Correct.
So you sell, a seller sells, but they don't get the money,
That is correct.
Yeah.
Goes to the intermediary.
right? They never touch the money, which therefore you have no gain, right? You didn't have money. And then when you go to buy, the intermediary releases the funds at that time.
Correct. So when somebody uses my office, usually the seller will call me up and say, okay, what do I need to do? And I always tell them, you don't have to do anything but notify the closing company. I'm involved and I will do everything from that moment forward. So
Oh,
it's
that's
easy
nice.
for them.
Yeah.
Outside of that, though, they're still signing the paperwork,
Correct.
right? Closing, whatever, on both the sell and the buy, correct?
Correct.
And away you go. Can Mark Violette be the closing attorney, the intermediary at the same time?
So they have rules about whether that can be the same person. And it gets a little complicated on ownership percentages. So you will see where the closing company and or will have kind of a same named company that may not be the same owner of the closing company. So it may look like it is, but traditionally there's a little variation in ownership.
So you don't normally do it. Is that fair to say?
Correct.
Okay.
Yeah.
In other words, no.
No.
Not really.
Right. But when we talk about who can be an intermediary, the one thing I find completely interesting is there is no regulation. So John could be an intermediary if he wanted to. The only people that are prohibited from actually being an intermediary are related parties.
Okay.
So usually it's sideways, so it's gonna be spouses, up, parents, down, siblings. Somebody that's blood related is going to be excluded from being an intermediary. But you could have somebody off the street say, hey, I'm an intermediary, close with me. They get involved, the funds get wired to this intermediary. Next thing you know, boom, they're gone in Mexico and they never come back.
That scares me a
Take
little
the money
bit.
and run, right? So when you're on Google intermediaries, because Mark's charging you whatever he's charging, oh, I'm going to get a better deal. Oh, here's Juan Valdez down in, wherever. He'll do it for 45
Bob.
bucks.
Right.
Just wire me your $1 million and I'll only charge
take care
45
of it.
bucks.
So obviously it would be a good idea if you're contemplating doing a 1031 exchange to find somebody you trust that knows that they've worked with a reputable company that's local, that you can walk into their office, you know they exist, because usually when you're doing a 1031, you're involving a lot of money.
A lot of money. You can Google horror stories, so be careful.
Correct.
Okay, so you got a regular 1031. I own an investment, condo, house, land, whatever. I want to buy another one because I got a good deal on it. It's going to go up better and whatever. I'm rolling the money, keeping it going. Awesome. What else is there?
So the other types, there could be what we call a reverse exchange.
There we go.
Right. So I only handle what we call the deferred or traditional ones. So these other three that we'll talk about, I don't actually handle those, but if they need it, I can refer them out to somebody that does. But in a nutshell, a reverse basically is you can't sell your original property first. You've identified some property that you want to purchase, and you're going to have to close on that one first.
Okay.
Now, you may go, well, where's the money come from then? Because you haven't sold, so you don't have the money to buy this property that you want to buy. And that's what makes it expensive to do a reverse and complicated to do a reverse.
Okay.
So ultimately, there are companies out there that have lenders, because in a reverse, there's going to be a promissory note involved, but it's what we call a non-recourse, which means the lender can't actually sue the borrower for money damages.
So the cost of that money is going to be more to offset that risk.
Correct. And you can only use particular lenders. Most of your reverse 1031 companies already have lenders that are willing to loan the funds over those. And one of the other main differences is in a normal 1031, it's going to come out of your name and the new property is going to go directly into your name. With a reverse 1031, they create an entity called an exchange accommodations title holder.
All right.
So there's an LLC that gets formed. The title goes into the LLC, not the seller. And then ultimately, when they sell the original property, the funds are used to pay off the existing loan, and then they will transfer the ownership out of the LLC into the original owner.
That is complicated.
Yeah.
Correct.
And I think that's probably used more on a commercial side of things, maybe larger deals. Would that be fair to say?
Well, I think it's more of a timing. So if it's harder to sell than it is to acquire, then it could be done for those reasons. Or a buyer finds a specific piece of property that they really want and they haven't sold theirs yet. But again, they have timeframes. So from the time that you acquire, there is a 180-day time frame. So if you can't sell your property within that time frame, guess what? You've now bought a piece of property and you can't 1031.
Okay, so hold on. On all the way through on the time frames, there's not a penalty outside of you just can't do it anymore. There's not a additional penalty. You didn't use it. Here's a $500 fine.
Correct.
Right. Are you paying the intermediary for the holding of the money, though? That's a fine.
So each intermediary is going to charge whatever fees they want to charge. So for me, I charge a $750 one-time flat fee on the front end of the closing. There's no additional cost.
Whether you close or not.
Correct.
On the next side.
Correct.
I got it.
Yep.
Which is what it should be. Okay.
So we'll call it the third simultaneous 1031s, which is rare because basically your buyer would be doing a 1031, your seller would be doing a 1031, and they're swapping properties.
The same property?
Well, no.
They're buying and selling their own.
Yeah.
The buyer wants the sellers, the seller wants the buyers.
You have condo number 104. I have condo number 205. I like your condo. I like yours. Let's swap.
A trade.
Yeah.
Correct.
Yeah, that probably doesn't happen all that often.
It does not. Yeah.
But it does.
That's why it's number 3 on the list.
Yeah.
Right.
Watch us get flooded with these number 3s. Mark, I got another one.
Well, that's good news for everybody if we do.
Yeah, why not, right?
Yeah. And then the last one is going to be what we call an improvement 1031.
Okay.
That's where you're actually going to buy vacant land and put an improvement on it. Now imagine the time frames.
I know some of you bought a vacant land today with you.
Right? But you have to completely construct the new property within the 180 days.
That might be a problem.
6 months.
Okay.
So most properties that are 2,000 square feet or more, probably not going to get done in 6 months.
Can't throw up a tent.
With these supply chain issues,
Yeah.
yikes.
So we're not going to see a whole lot of what we call improvement 1031s. And I'm trying to think, there was one more thing.
Why would you do
Oh, so with the improvement also, it goes into that accommodation title holder. So additional costs set up. So with the expense of it and the timeframes, not likely going to happen in our lifetime.
Right.
Unless, I mean, I suppose maybe if you got one of those prefab homes,
Yeah.
it's possible you could do it there, but
Yeah.
sticks and whatever, not going to happen.
Unlikely for sure. All right, so the 1031 is a valuable tool for anybody who wants to avoid capital gains.
Defer. You can't ever avoid it.
I guess that's
At
good,
this
good
point,
choice.
yeah.
Right. The theory, though, that I've been trained on is you keep rolling them until you die. And then you got
you
step
don't-
up
then you don't
stuff
care.
and all kinds of whatever.
Yeah.
Yeah, usually the
accounting
dead
games
the dead
still
person's
make
not too concerned about their taxes.
less for sure.
Right.
Less for
Yeah.
sure.
So, and then some of the other issues that normally come up with the 1031s, I'll get a question like, okay, well, I just bought one and did a 1031. Can I sell it the next month and do it again if I want to? And the IRS is not clear on any of this, but it seems that the safety zone is a 2-year time window. Not to say that people haven't done it sooner. Don't forget, you would need the IRS to audit you, make a deal of it, disqualify it, or try to do something there. And they're short-staffed and kind of busy. So,
But we're not encouraging you to push the IRS unless you're comfortable with what you're doing.
correct.
You should not fear an audit. If you're doing things right, I mean, you should almost be,
Yeah.
hey, bring it on.
What does it matter?
Yeah.
Yeah.
Let's make sure I'm doing what I think I'm doing.
And then probably the other most common question I get is, all right, well, I bought in my individual name. I now want to sell, but I want to form an LLC. Can the LLC go ahead and be the owner in the replacement property? So the IRS has what we call the same taxpayer rule. And again, I'm not an accountant, and it can get a little complicated.
Yep.
LLCs can be what we call a disregarded entity, single member LLC.
Okay.
If that's the case, then yes, you can, because the taxpayer, even though they form an LLC, it's a disregarded entity, so they're one and the same. If you go from a single person to a multi-member LLC, then it's not the same taxpayer. So I would tell those people they cannot do that. So one thing they have to be aware of, if you're selling, I usually say they're dominoes. The name coming out has to match the name going in. And if it doesn't, we need to explore why it's not and whether or not it qualifies or not. Same with like trusts. So usually trusts are disregarded entities. So most of the time it can go into a trust if the original owner is also beneficiary trustee of the trust.
Is that an accounting thing, or you're comfortable handling all that? Or?
No, usually those we need to know in advance. Yeah. Correct. When I say accounting, I'm like, don't call me up and say, if I didn't do this, how much am I going to pay in taxes? Because if you think of your tax return, this is one line item of a melting pot of other issues. You could have other write-offs that help reduce your tax liability. So I usually kick that to the accountants.
Okay. Off the road on this, there's a lot of talk 1031's going away. Have you hearing this, or?
Current administration, when they came out in March and April, said one thing they definitely want to do is try to get rid of the 1031 tax-deferred exchange, because then they can get all their taxes up front.
They've subsequently walked that back some, but it's always, the wolf is always at the door, so to speak.
Lingering.
Right?
Yeah, so sometimes I have a conversation with a seller to say, right now, if you were to not do a 1031, even though I want them to do 1031s because that's how sometimes I get paid, I will tell them, you need to consider this. Right now, capital gains for you is only 15%. Current administration can say, you know what, we're going to jack that to 40%. So if you're not,
And they're talking about it.
Yeah.
right. So if you're not planning on holding your replacement property long enough to have, could be multiple administrations to move a percentage back down to 15%, you may be better cashing out now, paying your 15%, and then purchasing the new unit with what we would call the higher basis. So if you paid $200 originally for your original one, and then you cash out and you go buy something for $400,000 or $500,000, the next time you go to sell it, your basis is at the $400,000 or $500,000.
Yeah.
Better way to go.
Yeah, definitely.
If only if you can see the future.
Yeah.
Oh, I can see it.
Good.
It's coming like a freight train. All right, so yeah, that's it. Is that the basics of 1031, you think?
Yeah, I think the last thing that we didn't cover was people get the misconception. So here's what happened, let's say in 2006. Somebody bought a property for 100. Mm-hmm. It went up to 300,000. They paid cash for it.
Yep.
Then when it was at 300,000, they did a cash out refinance.
Yep.
Now they owe 200,000 on this piece of property, so there's only liquid 100,000 of value. And they think, well, I'm only getting 100,000 at closing. Why is it I have to repurchase a property that's more than 300,000 in order to not have boot? And the answer is because the IRS is only going to look at what did you pay for it, what did you sell it for? Whatever you did in the middle is completely irrelevant to them.
And all of a sudden you forget about that money you took out.
Right.
Oh, that's right. Dang. Yeah, fair enough, though. Fair enough. So that's going to come up more. We're going to have a little bit of probably of a softening of the market. You'll probably see some of that. Okay, because people are going to do 1031s. It's a big part of what we do, what you do. We see it all the time. I hear people all the time, where am I going to go? Where am I going to go right now? I don't want to pay the government. Where am I going to move my money to? 1031. I can't even find anything to buy.
Yep.
But as more properties come on the market available, we're going to start to see these jump again. And I think people will be able to, we want to turn them over to Mark Violette, PA, for doing this, right?
Correct.
Okay. How do they get to Mark Violette, PA?
Easiest way, obviously, I've got a website, markavioletpa.com, so they can go on there, get all the information, check me out, make sure I'm legit.
All right, hold on. markavioletpa.com?
Correct.
Okay. Do you have a phone number you want to talk about? Or
They can call us at 850-424-5562.
Okay. That's what
Perfect.
you do. That's what you do. Any questions for...
No, I think it's kind of cool though, the 1031. I mean, it's for somebody like myself that's just getting into investing, or it's for the guy that's been doing it for 20 years.
Yeah. Oh, yeah.
It's kind of cool that anybody can do it if they just have the knowledge.
The bigger the player, the bigger the 1031s.
Yeah.
Yeah, and it kind of ebbs and flows as the economy ebbs and flows.
Yeah.
So again, we saw a lot of it 04 to 06. And then as values pull back, you don't see any of it for years.
Yep.
And then as values go up again, you see it again. So in the event the economy pulls back and they go away, you just have to keep re-educating your clients that as you get equity, here's one thing, not to say that they must do it, but obviously knowledge is key.
Yep.
Yeah.
Yeah, it's an option to be able to do. Mark, thanks so much, bud. Appreciate you.
Thank you for having
That was
me.
good. So that was this week's show. I hope it was informative, helpful, and good. Thanks so much for watching.
And if you guys want to hear more, make sure you subscribe, or you can go to our website, which is smartbeachinvestor.com.